By looking at waves, you can name a market mood, what you can expect to take from market at current conditions, trend changing signs, and etc. So it is very important to know waves and follow your structures on the chart from the very beginning at your trading career. There is two types of waves, top wave and bottom wave. Basically, this is of what market consists of. The whole chart is made of bottom and top waves. Each wave has a peak of which afterwards starts to move downwards or upwards, depending on the type of wave. Let's take a look at the chart. It is hourly time frame at Nasdaq's 100 futures market. At first, we can notice market movements downwards. Market moving downwards without significant pullbacks, reaching bottom at this period, which is peak down, and afterwards starts moving in opposite direction, forming a bottom wave. Wave is completed when market breaks the upward movement and proceeds its trend downwards, as you can see right here. What's happening afterwards? Market continued to move downwards, forming another few small bottom waves. The last bottom wave is ever so slightly different, as you can see. Wave is completed. However, small spike up with short down movements forming a small top wave, and market direction proceeds upwards, forming top waves one after another. Of course, you can also look at waves in this perspective. Here is the top wave, followed by bottom wave. Top, bottom waves, top, bottom waves, and so on. Let's switch to 5 minutes time frame now. Let's just move to the past for a bit. Okay, so there is the same bottom and top waves, no anyhow order. It might be difficult to see, but waves are there. As you remember, I mentioned that in real markets, you will not get perfect structures. You get what you get, and it is a real market. So what we have here? Strange bottom wave with some movements in it, to which I wouldn't pay attention too much. Top wave would be this one, and another strange bottom wave. The market moved sideways due to simple reason. The market was closed at this point. And after a period of time starts moving with quite good looking top and bottom waves. As you can see, chart is not all the times clear to read, and waves could be hard to see. Therefore, there are quite a few kinds of waves. Whatever it is, bottom or top wave, it could be clear, unbroken round wave, broken wave, or spike waves. Round wave. Market movement in period of time with clear round structure without movements in it or rapid jumps. Broken wave. Market movement in period of time without clear structure. Spike wave. Rapid market movement in short period of time. Let's take a look at the chart. As you can see at the beginning of a chart, there is a huge rapid move up, followed by same rapid move downwards. That would be spike waves. Then, market forming pretty clear round top and bottom waves. And from this point, market starts to be nasty, so to speak. First, there is top broken wave. Why it is broken wave? If you take closer look, market forming higher highs as well as lower lows with some movements in it. That is not clear structure for sure. After broken top wave, follows spikish bottom wave, and another broken top wave. Only here it is round top wave. Let's move on. I will not comment these night movements, nothing is happening to be honest. So here it is one beautiful round wave, or you can also call it few round waves. It doesn't really matter at this point. And then again, spikish broken wave. Spike followed by some broken movements. Let's quickly switch to other market to see what kinds of waves forming there. It is DAX 40 futures indices at 5 minutes time frame. As you can see, from the very beginning, market produced many strange waves. Here is a spike bottom wave, followed by top broken wave, another top broken wave, then two spikish top and bottom waves, broken wave, short movements downwards with decent impulse at the end, again broken bottom wave, spikish top wave, and so on. Why there is so many nasty movements? Well, it can be quite a few reasons. Maybe there was intense economic period, maybe some bad or good news within. Sometimes there is no reason, or at least you don't know. And it's okay. You have your strategy, rules, consistency of approach, and that is all you need. As we can name waves right now, it is important to know where those waves can be useful. It depends on your trading style and strategy, of course, but waves are mostly useful at hourly chart at the most, because our trades will be executed at smaller time frame. So it is okay to analyze hourly chart to see what kinds of waves it is forming there and what you can expect. However, more important is to analyze waves and their structures at 5 minutes time frame, or smaller, if your trading chart at which you are looking for an entry into a trade is smaller than 5 minutes. Shortly, the best environment for trading are with round waves. However, it doesn't mean that spike or bottom waves do not fit for trades. Of course you can trade even with those kinds of waves. However, you should pay extra attention there. Way different situations are with broken or spike waves, especially with spike waves. There are huge chances that rapid move either up or down will pull your stop in a matter of seconds sometimes. Therefore, you have to be very careful. It doesn't mean that you cannot trade at this environment. When you know what you're doing, when you identify specific, time-tested, strong area, pattern, or whatever, you can trade. But even though, recommended is to keep your stop as low as possible, and to be ready to take losses anyway. When most of waves on a chart are broken, it means there is uncertainty at the market. It is not that dangerous to trade, but still, you must pay extra attention and to take only fully confirmed trades as per your strategy and trading plan. Let's get to the chart. At your screen, DAX 40 futures at 5 minutes time frame. It is pretty good trading environment with clear, round or broken waves at some points. But in general, it is a real good trading environment. Firstly, market was trending upwards. Then, trend direction changed and started being bearish. Anyway, you could benefit from either way. If we move to the right for a bit, we can notice that market produced quite a few spike waves, as you can see. For example, if your intention was to take long trade from this area, your stop most likely would be pulled, since there was a big tail of candle, even though market moved in your predicted direction afterwards. Another thing in terms of expectations, when it comes to waves, would be counting waves. For example, to count how many candles it takes to complete a wave. Count last 5 waves and take average number, then measure how many points on average one wave reached from its bottom to peak. In this way, you can predict how long on average could it take to reach your target. And if after decent amount of time your target isn't reached, that could be negative sign already, and you should pay extra attention to your opened trade. Anyway, do not rely on this too much. It's just another hint of your expectations. Thanks so much for watching, and if you found this video helpful or interesting, please give it a thumbs up. It really helps the channel to grow. And if you'd like to see more content like this, make sure to subscribe and hit the notification bell so you don't miss any future videos. I would also love to hear your thoughts or questions in the comment below. Thanks again, and I'll see you in the next video.